Thank you, John, and welcome to all of the Comply attendees joining us. My name is Shelley Metz-Galloway, and I'm the Managing Director and U.S. Regulatory Compliance Lead at Protiviti. Protiviti is a global consulting firm that delivers deep expertise, objective insights, and a tailored approach to help leaders face the future with confidence. I'm very excited to talk to our guests today, our compliance leaders, about how they are managing their respective established risk appetites and remaining competitive in the face of the many challenges 2021 brings. So let's start by welcoming our panelist, Celie Niehaus, from the Chief Compliance Officer of BBVA here in the United States, Meredith Fuchs, General Counsel at Plaid, and Annie Delgado, Chief Compliance Officer with Upstart. Welcome to all of you. Meredith, starting with you, you have a background as a regulator, as General Counsel and Deputy Director at the CFPB in its inception, and even at traditional financial institutions like Capital One. Now at Plaid, you sit in at the front of the fintech ecosystem, which is rapidly transforming the financial services industry and opening up new tools for consumers. Are you expecting changes in the regulatory approach under the new administration? And if so, what changes do you expect? And what areas do you think the new administration will focus on related to innovation and consumer protection for the financial services industry, especially for fintechs like yourself?
Thank you. It's a very exciting time for companies like mine. Unfortunately, I'd say for business generally, we are seeing a pendulum swing, which is always unsettling to the new administration. There's been a nomination of a new director for the CFPB, Rohit Chopra, who I worked with when I was at the CFPB during the early days. He will be an aggressive regulator if he's confirmed. And even CFPB's interim director just yesterday put out an announcement talking about a return to much more aggressive oversight and enforcement. So it's exciting from the position of a company trying to handle those changes. What are they going to focus on? There's a few things that have already become clear. Anything related to pandemic recovery and sort of the impacts that people and consumers had because of the pandemic, I think is going to be on the agenda, and a lot of things related to equity and fairness. So I think we'll see a return to some of the fair lending issues that really were deprioritized over the last 4 years. Another area which is particularly exciting for my company is CFPB is in the middle of a rulemaking process related to Section 1033 of the Dodd-Frank Act, which has to do with consumers' access to their own data. And that is really right at the heart of fintech, because that is the rulemaking that is going to ensure that we have better clarity about consumers' ability to collect data from their financial institutions to be used by other fintechs. So all of that is really exciting. Balanced on the other side of, sort of more worrisome trends, there's no question that there is a focus of regulators in Congress on technology in general. So there could be some additional oversight in that function. And then privacy. With the Democrats having now the control of the Senate, it seems even more likely that there probably will be privacy legislation that gets enacted. And that's extremely relevant to everyone in the financial services industry. And then one last thing I want to highlight is, because technology and fintech has been expanding so much, we've seen fintech and banking come up against each other. And I think there's really interesting policy issues ahead about what is a bank, what are banking services, who can provide those services, and how should those be regulated. And I just think the new administration is going to have an exciting time untangling those questions.
Thank you very much, Meredith. Those are great insights. We appreciate your sharing those. Celie, I'd like to ask you some questions as well. You're leading a compliance program transformation at BBVA to an agile structure that functions in multidisciplinary teams with empowered, autonomous, and execution-oriented compliance professionals. Can you tell us more about how this has come about, what it looks like, how it works, and why you think it's critical to delivering risk-based and customer experience-focused solutions at BBVA while reducing time to market?
Well, thanks for that question, Shelley. I'm pleased to say that we've completed the transformation. So we've gone from storming and forming, and I think we're now norming a bit in this space. But I hope that most of our participants are familiar with the Agile principles, and typically you see that in technology companies, technology departments, and sometimes in what would be considered first line functions. I think we're one of the few second line compliance functions that are fully functioning in an agile structure. And what that means is what the word is. We're much more flexible than we used to be, much more adaptable. I'll give you a couple of examples. We have some discipline heads, so we have people setting strategy in the AML space, in corporate and integrity, in securities and derivatives, for example. And so those leaders work obviously very closely with the business and then help set strategies within the compliance program by which others execute. The majority of our team is in what's known as the execution block. And you'll find things there like AML operations of CDD and EDD, research and alerts, filing of CTRs, SARs. I know it's a lot of acronyms, but I believe all of our participants are familiar with those. And by grouping people together with like skill sets and backgrounds, and then actually allowing our teams to be fully functional and empowered on how to complete the work. I'm pleased to share that within the first 6 months, we noticed over 30% productivity jump, where our people were working more effectively, completing projects more quickly, and really delivering to our business partners well. At BBVA, Agile has been implemented across all jurisdictions. It's a global initiative. And so operating similarly with each other in the functions makes it really much more easy to deliver to our customers. It helps us deliver on risk as well, because we are now thinking more similarly, because we're coming from an agile perspective. One of the things that has really been a lift for compliance in particular, when we all started experiencing the pandemic almost a year ago, and on a Friday afternoon, we learned we would not return to the office Monday. My team was fully functional within 5 business days. And it's because they knew what to do. They did not have to wait for someone to tell them. And that's an agile principle of teams communicating a great deal, being aware of what's going on, how to get things done. So that flexibility was especially helpful to us as we transitioned from office to home, working remotely. And the only reason it took us 5 business days is we had to find some laptops for some of our people who were using desktops in their office setting. The other thing I would share is, because the first line, the second line are all operating in Agile, it's easier for our compliance advisors who are aligned with business areas to be part of their pods. I've been at a company where the first line was in Agile, but the second line wasn't. And that presented some challenges for the second line to be engaged timely and appropriately. With everyone having the Agile mindset, it's been easier for us to support the business, to provide real-time red flags, concerns they should think about, and deliver products more effectively to the market. It's especially helped us in the new digital business areas arm of BBVA, where we were being quite innovative. So compliance being more agile helped the business continue to deliver to the market.
Thank you, Celie. Annie, first off, I want to say congratulations on the recent IPO.
Thank you.
That's great news. Upstart makes personal loans to consumers, and in what has been a rocky year for many lenders, Upstart processed 81,000 loans in the third quarter of 2020. That's a 26% increase from a year previously. As you grow your consumer lending portfolio and work with your bank partners, tell us how you build trust with those partners, while at the same time verifying and reporting on your ability to meet compliance requirements when it comes to consumer protection.
Yes, absolutely. Thank you for that question. So as you mentioned, at Upstart, we partner with banks to offer a fully automated loan transaction to their customers and to consumers online. And we have a lot of different types of banks that offer credit on the platform. So there can be some range and diversity in terms of both the different banks' sort of oversight and risk appetites, as well as their actual regulatory regimes, since they aren't all regulated by the same body. So at Upstart, the way we really meet that challenge is two ways. The first is really investing in a strong compliance program and a strong compliance team. And the second way is just continued and ongoing transparency and discussion with the bank partners about their programs. So our compliance program, we have all the same pillars that you would expect from a bank's CMS. And as we execute on our kind of core compliance work, whether it's routine testing or complaints oversight, policy management, we just try to keep a very open dialogue with the key stakeholders at each of our banks, so that we can ensure they consistently feel like they have a really strong pulse on what's happening with their program. And it's, at the end of the day, just critical for Upstart's success that our bank partners are feeling good about our compliance program and our compliance approach. So it's an area that we just continue to invest really heavily in.
That's great. And in addition to the work that you've done thus far, you've been a pioneer in many ways. On the compliance front, Upstart was the first company to ever receive a no action letter from the CFPB back in 2017. And you've just received another one in November of last year. Tell us what these no action letters mean for Upstart and how you're pioneering new ways to manage compliance for innovative lending technology that improves consumer access to credit.
Yeah, absolutely. Our work with the CFPB over the past many years has been very, very positive for Upstart. I think that the opportunity for fintechs and regulators and banks to collaboratively discuss potential rewards and risks associated with some of the innovations that fintechs are bringing to market is just so important, because that ongoing discourse between regulators and industry at the end of the day is not only going to improve the product offering that we bring to consumers, but I think it also provides a really necessary foundation for durable and lasting government policy. So those discussions have just been very positive on our side. One of the main areas of focus for us, and the focus of our no action letter, as we've built our compliance program, has been thinking through how to properly test for fair lending and apply appropriate model governance and oversight when you are working with a credit model that leverages AI and alternative data, such as our model does. So our work with the CFPB has really been interactive, discussing and applying various testing methodologies, observing the strengths and weaknesses associated with those, and then coming up with a consistent set of metrics that we can watch on an ongoing basis to ensure that we really understand how the model is performing in terms of both increasing access to credit and also reducing disparate impact. And so what we have built is sort of a system where we have sophisticated testing at scale. Then we share the results of that testing on an ongoing basis with the Bureau. And that resulting conversation is valuable for Upstart because it helps us to enhance our compliance and model risk management programs. And our hope is that it's also valuable for the Bureau as they think through appropriate ways to supervise models like ours, because this is going to be a continued type of technology that's going to be used in the market in the upcoming years. And the results today are something that we're very proud of. Honestly, it's one of the main reasons I love my job. Our most recent results show that our model approves 27% more borrowers with 16% lower APRs than a traditional model. And so those types of results are really what gets me up in the morning and what gets our whole team excited.
Thank you for sharing that. And it's great to see how excited you are about the work that you're doing. I'd like to return to Meredith and Celia at this point and talk a little bit about the pandemic. It's pushed consumer adoption of technology. It's pushed all of us into technology, as you well know. In fact, Plaid conducted research that showed 60% of people are using more fintech now than before COVID-19, and that 80% said that they could now manage their financial life without going into a bank branch. So as the pandemic has pushed us faster into tech adoption, are you seeing a faster adoption of digitalized compliance programs? Is compliance and consumer protection keeping up? That's been a long-standing question, so we're very interested to hear both of your perspectives on this. Meredith?
Sure. Well, first of all, before I jump in, I just want to say Annie just presented the best use case I can imagine for why this kind of consumer information sharing and fintech development is so valuable. And Upstart has been, really innovative and using the regulatory oversight in a way that's most effective. So congratulations for all that great work, Annie. In terms of the expansion of fintech, the pandemic has certainly had an impact on it, but we were really already headed in that direction. And one of the things that's been most exciting for me, coming from a large financial institution, a well-established bank, into a technology company, is to see how we are using all of those new opportunities for different kinds of compliance in our system. I mean, I am amazed now to see some of the products that are out there, and they're not all as evolved as I would like, but one good example of a way that we can use technology is using AI systems to do things like look at our contracts and see what our obligations are in our contracts and make sure they're scanning for things that we are going to then have to build into our controls and our systems. So we're definitely beginning to use more of those things. What's interesting about a company like Plaid is we're not a bank, and we're not really moving money at all. We're not really involved in the money. We're really a data company. So we're trying to build our compliance system in a way that doesn't overburden the system, but is something that the banks like BBVA and customers who are downstream like an Upstart would feel extremely comfortable with. And I would love to hear what Celia has to say about the opportunities she's seeing, because I am really, really impressed by the real growth of compliance systems right now.
Celia?
Well, I'll take your cue, Meredith. I do think in a way, compliance is helping the consumer where in the background they don't realize. Things, and Meredith mentioned it, using AI, but you just using some basic technology is becoming more common across all financial institutions, doing things like keyword searches in complaints. You can identify numerous opportunities for improvement by thoroughly vetting the complaints that come from customers. And when I say complaints, that's the recordings of interactions with call center people, and actually taking those recordings, turning them into data that can then be scanned for those keywords. We can find out an awful lot about our customer experience and the potential for issues that have not been identified otherwise. In also the things that we've been using, again, back to the agile structure, one of our disciplines is advanced analytics. So I have a team of people, it's only 3, so don't get too excited, but a team of 3 that are focused on advanced analytics, not just culling through our data and finding out how to get data from multiple systems so that our fair lending analytics or analysis team can do their job, but also to teach others within our compliance function how to fish, so they can fish for themselves and they can go get that data and understand how to do their jobs more quickly, using technology to help our compliance professionals do what they're supposed to do versus spending time trying to get the work ready to do it. you may not realize actually does benefit the consumer. It's just so far in the background, you don't realize it. But for example, in the AML space, where we're trying to verify who a customer is through customer due diligence and the enhanced due diligence, the faster we can do that through a reliable data set, through reliable system tuning models, actually can help a customer get that account open more quickly, their loan close more quickly. So those things a customer may never see, and we're okay with that, is a great experience and helps them feel confident in trusting their money with us. At the end of the day, that's what we do. We care for someone's money, and that's the most important service that we can provide to them. So making it easy for them is really important, and making sure that we are adhering to all the regulatory requirements in a way that allows us for it not to be so clunky to deliver those products and services is really key in the technology space for compliance.
Yeah, can I just add in, I think Celia gave a great couple of examples there. That is one of the things that I'm definitely observing, that you're able to use the technology, the compliance technology, to figure out what are real problems and what are things that you can pretty easily address and even automate, fixing along the way. So I get excited about that, because it means that we're going to put people hours into solving more complex, more nuanced, potentially more buried issues, because the other ones are going to be handled very automatically.
So I'm hearing speed, efficiency, effectiveness, and compliance all being driven by a highly technology-driven applications, various applications that allow you to do that. That's very exciting. Well, I have one more question, and it's for everyone. So we'll start with Annie, but I'll ask the question of all of you. What is the one thing that you and your team are focused on in 2021? And is there a compliance initiative or regulatory issue in particular that you have as a very high priority item? Annie?
Yeah, I think probably all of us would say it's very hard to select one thing that you're focused on, because our job is sort of to have our eyes on everything. But I think continuing to shift the compliance programs from more qualitative approaches to quantitative approaches, similar to sort of what we were just discussing, is a core thing I'm always thinking about. How to use data to really have risk vitals and know when you have spiking risk, and to Meredith's point, make decisions about what is something that can be easily solved or automated away versus where you need to really apply sort of human resources to a particular issue. So that's definitely top of mind for me in terms of building the program. And in terms of regulatory issues, I think there's going to be sort of just continued discussion and dialogue about model explainability, the use of alternative data, alternative credit modeling techniques, obviously near and dear to my heart and Upstart's heart. And I think those conversations are going to be ongoing, and we'll see a lot of sort of involvement in that discussion over the upcoming months.
Thank you, Annie. And next to Celie.
I'll answer it two ways. With the recent announcement of the PNC acquisition, that is our focus for 2021, a very successful integration into PNC, and then to make sure that the entities remaining in the U.S. from BBVA are set up for success as well. So that's our primary focus. But if we were more in a business as usual scenario, really understanding how to make sure that we are categorizing partnerships with banking versus third parties. If you designate, or if someone is defined as a third party, the regulatory requirements are heavy and convoluted, necessary, but complex. So being able to think about what's a partnership versus what's a third party, and then also getting our arms around where the regulators may be taking us regarding fourth parties. That's a space that we were starting to focus on. We were going to partner with Google and making sure that we where Google is a partner, not a third party, because otherwise it could really make that business strategy difficult to deliver in a third party setting. So, educating our first line, not to default to something easier, but to really understand and to complete an assessment of what is this relationship the bank is entering into, and making sure that we have the right risk and controls regardless of how they're designated. And then how do we really see into the risks that we could be taking on regardless of how we categorize them.
Thank you very much, Celie. And last, Meredith, if you'll share your thoughts with us as well.
Sure. Well, I mentioned at the outset that one of the things, the policy regulatory issues I'm focused on is the 1033 rulemaking by CFPB. I'm very much hoping that that stays at the top of the agenda for CFPB. And over the course of this year, industry and consumer groups and the agency come together to try to craft a system that works, keeping consumers at the forefront and trying to make sure consumers have choice about how their data is used. I think that it is highly likely that the outcome of that rulemaking process is more regulation over time, oversight of different aspects of the ecosystem. So I'm really excited to be thinking about that and working on that and planning for that. And I would say that's probably one of my major priorities.
Well, that's an exciting breadth of items. I mean, we're talking about model explainability and the use of models in more sophisticated ways. We're talking about third-party risk management, fourth-party risk management, and partnerships, and then impending rulemaking as well. So that's a lot on the compliance front, and we're very lucky to have the opportunity to hear your thoughts on all of those items. In closing, I just want to thank again our panelists, Celie Niehaus, the Chief Compliance Officer of BBVA USA, Meredith Fuchs, the General Counsel at Plaid, and Annie Delgado, the Chief Compliance Officer at Upstart. I think this has been a great conversation, really rich with insights, and we want to thank you for being with us today. I hope everyone continues to enjoy the Comply Conference, and we'll look forward to seeing more later. Thank you.
Thank you.
Thank you.